So I have 4 positions right now in the healthcare sector, and I'm going to cut back to 2. And so I'm going to share with you in this video the 2 that I'm going to keep and the 2 that I'm going to sell. Welcome to the channel. My name is Paris Clough, and this is Financial Self-Reliance. I absolutely love helping people manage, protect, and grow their money. And on this video, we're going to talk to you about how to grow your money through dividend investing. I've done some things with my dividend portfolio that in the beginning, was all about yield. And so I was going to go for the biggest yield companies that I knew about. I searched the YouTube, I searched Google, I searched everywhere I could find to find the companies with the biggest and best yields. Well, I realized that probably isn't the best strategy. And what I've also realized is that now that I have a little bit of experience and have a few more positions, I kind of got too many, and I wanted to narrow it down to just the top 2 to maybe 3 positions in each sector. Now, I've gone through a list of all the different positions that I've held in each of the sectors. If you want to check my Webull journey, you can go ahead and check it up here. I'll put it in the card, and I'll put it in the description below as well. But in this particular video, I'm going to focus in on the healthcare sector. So let's talk a little bit about healthcare and the 4 positions that I own and the 2 I'm going to sell and why. Okay, so let's take a look at my spreadsheet. When I began my dividend journey, I used this particular spreadsheet to track all of my purchases, all my holdings, all my positions. And I built this spreadsheet with my brother, who actually is really a lot better at spreadsheets and Excel formulas and all that stuff than I am. But in the healthcare sector, which you can see over here on this side here in column P, this particular sector I currently own 4 positions. And those positions are GILD, or Gilead Sciences, TAK, or Takeda Pharmaceuticals, AbbVie, ABBV, and then GSK. We're going to get into all of those here in just a minute. So I own 4 stocks in Guild, 5 stocks in TAK, 5 stocks in ABBV, and 10 stocks in GSK. Right now, my Webull portfolio is doing pretty well. It's down $850. Everybody's down right now. But the good news is these particular stocks, because they're dividend oriented, we're going to have a lot of that income still coming in regardless of the price of the stock. So the fluctuation in a dividend portfolio, fluctuation in price is not that big of a deal, because you're going to be able to buy those things at a lower premium and be able to get that dividend still coming in. So I think that the fact that we're on sale, a lot of these stocks are on sale right now, is a good thing. So right now it says, according to my portfolio here, it says I have a 9.82 total portfolio dividend yield, which is a really good yield. It's actually a fantastic yield. So I have some stocks that are paying really well, and some stocks that aren't paying that, that are paying less than that, because that's the average right now. My total annual income, it says here, is $1,800. I'm not entirely sure about that, because last time I checked, it was like just over 1,000. And then I updated a few of my positions and my holdings between the last video. So either somebody kicked in a huge dividend increase, or maybe I transposed the number and I put too many shares in there. So I'm going to take a look at that here in a minute. I'm just realizing that right now. So anyways, my current holdings is 51, and I want to be, there's 11 sectors, and I want to get down to 2 to 3 maybe in each sector. So I want to have closer to 30 to 40 current holdings. So I'm going to be going through my whole portfolio here pretty soon and getting rid of probably another 10 to 15 or more positions. So let's take a look at Seeking Alpha. I got the premium subscription so that I could really do some good research and keep track of my portfolio, and do some other things like stock screeners, so I can know what I'm going to be getting in the future as I build my portfolio back. See, I want to cut it down to 2 to 3 positions in each sector, and then I want to kind of really be careful about adding positions to my portfolio versus adding more shares of the positions that I already have. One of my strategies is to build my portfolio and each position to 100 shares. That way I can actually run some covered calls and make some money and some additional premiums each month on those covered calls. It's a really good strategy. I've actually been learning how to do it, so it's something that you really learn before you get into. But in this particular page here, it talks about a screener that I did about the best healthcare stocks that according to Seeking Alpha. They put Merck as the top, Pfizer. I actually have ABBV in my portfolio, as you know, and Guild. So of the top 7 here that I did based on the screening criteria that I wanted, in the top 7, 2 of them were ones that I already hold. So I'm going to double down on those ones and get rid of the other ones. But let's take a look at each one individually. So on the Dividend Tracker, which is this program, and there's a link in the description below. It's fantastic. Actually, I like it because it gives me a chance to kind of have a dividend grade over here. So you can see that Gilead Sciences is a 77 out of 100. So that's a really good dividend grade. It gives me all the information I need to know about, gives me the dividends, gives me the grade, gives me the financials, gives me recommendations. It's all right here, and I can take a look at that. And then there's a community over here where I can go and we can talk about it. It gives me all of the graphs and charts, as you can see. I really like the Dividend Tracker. It's kind of a competitor to Simply Safe Dividends, and it's a lot less expensive. So they're really building it and growing this well. I think it's a great program. Click the link in the description below. If you sign up for the Dividend Tracker, use that link in the description below. Let's take a look at what Seeking Alpha has here for the Gilead Sciences. They trading for at 61.51 right now. Its dividend safety is a B+. Dividend growth is an A. Dividend yield is an A+. Dividend consistency is a C+. So it's really actually a good dividend paying stock. Take a look at this yield here, 4.83%. The payout ratio is 39%. That's a healthy payout ratio. And the 5-year growth rate is almost 8%. That's a really good 5-year growth rate. And they've been growing their dividend for 6 years in a row. So this is a really good company, Gilead Sciences. This is the one I'm actually going to be doubling down on and buying more shares and keeping this position. Let's take a look at this one though, Takeda Pharmaceuticals. This is a company that I bought a long time ago. It's one of the first ones that I bought when I was looking at the yield. They had a nice yield. Right now it's sitting at 4.91%. We'll look more about that yield and once we get over to Seeking Alpha. But over here you can see the dividend grade. At least it's over 50. It's 51 out of 100. Still doing a pretty good job here, Takeda Pharmaceuticals. SA Authors has them as a strong buy. Wall Street has a hold. Quant has a hold. And then when you click on dividends, it says Takeda does not perform or does not currently pay a dividend. Well, that's the whole point of a dividend portfolio, is to have positions that pay dividends. So Takeda is definitely one of those ones that I'm going to be getting rid of. I'm going to be selling that one so that I can get out of that position. If they're not even going to be paying a dividend, why am I in there in my dividend portfolio? So let's take a look at ABBV. This is one that everybody knows and loves, and probably you have it in your portfolio. If not, it's on your watch list. Let me know in the comments below. Do you have ABBV in your portfolio, or is it at least on your watch list? I bought ABBV. Let's take a look. I bought it back when it was $88 a share, and right now it's trading at $147, and that's down from what it was. So it's actually kind of on a discount right now. So highly recommend ABBV as a. AbbVie is one of the great dividend payers. And over here on Seeking Alpha, they have it as a dividend safety is a B+. Dividend growth is an A, dividend yield is an A+, dividend consistency is a B, 17% 5-year growth rate. Payout ratio is 41%, that's healthy, and a dividend yield of almost 4%, 3.93. Dividend growth, 9 years of dividend growth. AbbVie is definitely one of those ones that you want to have in your portfolio, at least have it on your watch list, and build up to the point where you can actually start buying some shares. So I want to buy some more shares of AbbVie, but I probably won't be able to buy a full share for a little while because of I'm kind of putting some money in some of the other positions that I have. So GSK is one that I've had. It's 50 out of 100. I'm going to be selling GSK. They have a nice dividend yield, but over here on Seeking Alpha, it has them as a buy, hold, but it doesn't have any of their scores here. It's got a 3.35 dividend yield. Payout ratio is nice. It's 30%, which is decent. I probably could give them a lot of room for growth. 5-year growth rate doesn't look very good, and 0 years of dividend growth. So those are the ones I'm going to be getting rid of. I'm going to be getting rid of GSK, and I'm going to get rid of Takeda Pharmaceutical Company. In the healthcare sector, I'm going to be focusing in on Gilead Sciences and AbbVie. Those are the two that I'm going to focus in on. And those guys have a great, look at this one, 80 out of 100 on the dividend grade. AbbVie is one of those ones that you're going to want to keep in your portfolio. Okay, so now let's take a look and see what my income is going to be for June according to the payout calendar with the Dividend Tracker here. So this is my all portfolios. I have my M1 Finance in here. That's not a video today we're doing, so I'm going to click on Webull portfolio only. So this is going to be my Webull only portfolio, all the shares that I have. So the 51 positions that I have right now, that after I make the sale of Takeda and GSK, I'm going to have 49 positions left. And so that's going to give me a total income for the month of June of $121.26. That's pretty cool. That's going to be one of my best months. Let's look over here. So as you can see, the best month I've ever had is this one here, and that was $138 a month. That month, September 2021, and a couple months ago I had $129.61. So if that's true, if I'm going to make $121.26 this month in June, this is the third best month I've ever had with my dividend portfolio. So I'm super excited to share that with you. Now, one last thing before I let you go, jump on over to Facebook. If you are in Facebook and you do anything on Facebook, go to my Financial Self-Reliance page. Click like on that, and then over here where it says more, click that and go to groups, and then come down into groups and click on the Manage, Protect, and Grow Your Money, Personal Finance and Investing, and then join that group. Get in the conversation. I want to build this group so that we can help each other manage, protect, and grow our money and become financially literate and financially independent and more financially self-reliant. I hope you got a lot out of this video. If you missed the last video I did, you can check it here. Go ahead and subscribe to the channel up here and check out this video up here that YouTube thinks you might like. Hope you have a great day and look forward to seeing you on the next one.